Okay, so now we've gone over very basics of level 1, level 2 in the prints, and also how to execute your orders by bidding, sweeping, and, and offering. We're going to go over big bids, and subsequently, big offers. Don't let this discourage you. It is a little bit more advanced than what you've seen before, but overall it's very simple, and the title explains it all. Now let's get started. What are big bids, and why are they important? Big bids are bids that are bigger than normal size that are shown, and they represent institutional size, meaning these are the institutions that put in their huge bids. Then they move the market. They are at least 10 times larger than what the bids you've seen previously. Remember, it's all relative. And a big bid is when there's a bid that's noticeably larger than all the other bids, usually over 10,000 shares in size, and they usually stick out when you see them. They're institutional orders, and remember, you want to follow what the institutions are doing. Institutions are, the big money, and they're the ones that move the stock prices. So, big bids, let's give a little example on this TXN. See here how it shows, 2400, 1500, but on this bid, it shows 1,343. Remember, you got to multiply that by 100. And this represents a big bid because it's showing 234,300 shares on the bid at 28.50. This is important because that represents institutional size. Remember, they stick out like sore thumbs. That's how they would look on the level 2 on the bid side. And when you see them, you got to pay attention to them. And there's certain trade plays where you can step in front of those and get out if that decrements, which we'll be going over in a little bit. But you should watch and keep track of that level and trade off of it. Remember, big bids are bids that are way larger, at least 10 times as large as what you've, the average of what you've been seeing. And they're usually at least 10,000 shares in size. So, what does it mean when there's 234,000 shares on the bid and 300 offer? Well, it shows that there's a large bid there and that it'll probably trade higher. You should keep track of that level and remember it. So, if you see more bids and less offers, chances of stock trading higher are pretty high, and vice versa. So, TXN is a chart of where that big bid was. The low is right there at that big bid, 28.50, right here, and ended up going a point higher. So your risk, essentially, say you got in at 51, or say you got in at a different exchange at 50, and you would have gone now if it decremented or if it dropped. Your risk was very, very minimal, right here, getting near the bottom of the move, and it went up about a point. So risk reward, that's great alone. So whenever you see a big bid, you usually want to step in front of it. Remember, if all your other indicators are in your favor. Decrementing. So I mentioned decrementing before. So when a bid decrements, it's reduced in size. And decrementing is when there's a, say, for example, a huge bid, and it decrements in size. It just gets smaller and smaller and smaller. And this usually happens when the bid is getting filled and level 2 is representing that in real time. The faster a bid is decrementing, then the more important it is. Remember, speed is very important. If it starts decrementing very, very quickly, it's probably going to get filled. If it gets, hit a little bit and hit a little bit and hit a little bit, then it'll probably get filled, but it's not as important. The faster it is, the more important it is. And you should take note of this, and remember to trade off that information. So what do you do when a big bid is decrementing? When a big bid decrements, you should think about exiting the position if you're long in front of that order, especially if it's decrementing quickly. You should really, really consider exiting the position because the chances of it dropping are pretty high. When a big decrements quickly, you should consider exiting your long position and possibly even getting short. Remember, you want to have other indicators in your favor. If it looks like a short setup and there's a huge bid there, then if it starts decrementing, you could probably get short there, or if it drops, and get short. Remember to have all the indicators in your favor for the higher probability trade. Sometimes there'll be a stock on the verge of breakdown. There's a huge bid and starts to decrement quickly. That means it's probably going to break down. So, exit your long if you're long, and you could possibly even exit short. The higher probability trade, if it's, the overall setup looks like a short and there's a big bid, it starts decrementing quickly, then you should enter short. Okay, in this video clip we're going to go over decrementing. Let's get started. Alright, keep it on this 2550 level. You see how it's 3,300 shares on the bid. Keep it on this number, and what decrementing is when it drops in size. See it decremented down and then dropped. We'll have another example now here. Okay, you see how there's a big bid there at 25.35. Keep an eye on the size of the bid. Just a flash order, but when it comes back, keep size. See how it continues to drop in size and later drops? That's an example of decrementing, where it has some size and it starts to decrement and trades lower in size. Okay, in this clip we're going to watch decrementing again. So here's a flash bid there. Now keep it on 95 cents. We're going to see a big bid show up. Right there, you see how there's 95 is a big bid there? Now keep an eye on that. Okay. You see how it started to print here on the bids. These are the red prints. Print 95, you start seeing it decrementing by dropping in size. Decrement, filled, and then dropped. What to do when there's a big bid? Usually you want to step in front of that bid and exit starts decrementing and drops in size or even drops. Remember, you got to keep in mind the real risk and what the underlying bids are doing. For example, there's a huge bid there and it starts holding, gets hit, and the larger the size, the larger the volume. Remember, we went over this before. The larger, more volume being done at the level, the more of a move you should expect. And usually when there's a big bid and you step in front of it and it gets filled very quickly and it drops, the slippage is going to be a lot more than a regular bid being dropped, just because of all that size. So you should definitely keep track of what the underlying bids are doing and measure your real risk. Remember, there's a big bid and it drops, the slippage is going to be a lot more. You probably won't get 99, 98, 97s. You probably get 10 cents if you're lucky, 5 cents. It just all depends on how big that bid is. And when a big drops, like I said, there's always going to be slippage. More than a regular bid drops, and you should definitely factor that in. Remember your real risk, and you should always calculate that properly. So, like I said before, when there's more bids than there are on the offers, the stock should probably trade higher. When you see big bids, you usually want to step in front of them by 1 penny. That's what I always do. I don't try, to save a penny by going on a different exchange, just because I prefer to get filled. And if you hit, you join them on the same bid at the same price, even at the same exchange, you'll probably not get filled unless that big bid gets filled first, because the order's going first in, first out, which means you're gonna, if you see that bid and then you step in after it, probably get filled after them. So I usually step up a penny, but that's just personal preference. And it's a very simple trade because you exit if the big bid drops or starts decrementing, or even decrementing quickly. So like we showed before in the example, what does a big bid look like in level 2? It's very easy to spot and it sticks like a sore thumb. So you'll see a couple bids for 100, a couple thousand shares, and then you'll see a bid, for example, for 100,000 shares. That alone is going to be the big bid. And you could tell because you'll see like 100 on NYSE, 200 in ARCA, and then a huge bid, which is way larger than the other bids on a NASDAQ. I'm not saying particularly NASDAQ, this is a perfect example, could be on any exchange. But, it usually sticks out like a sore thumb. So if the big bid is at least 10 times, larger than the average bid, then, that's a big bid. Usually at least 10,000 shares. I like to go about 50,000 to 100,000 shares for me to consider that big bid, because it all depends also on what stock you're trading, how much volume the stock does, and what the other previous bids and offers have been doing. So in this example, the big bid is right here at 30.18 on NASDAQ and it's showing 100,000 shares, while the other bids are just showing 100, 200 shares. You should always remember what levels they're at and keep note of that. For example, here's another big bid example on Best Buy, where it shows 20,000 shares on NYSE at 25.35, while all the other ones are showing 400, 200, 200, 200. Right? So you should always keep track of this, remember it, and if the setup's there, you could step in front of it. Here's another example on GMCR. So you see here again on the bids, 100, 200, 300 shares, 1100, and finally you see a large bid for 41,000 shares, 41,500 shares at the whole number. Again, that's a big bid. And you'll see more big bids at whole numbers than anywhere else. That is because, retail, they usually put in an order, oh, I'm going to buy at 30, I'm going to buy at 31. They don't say, oh, I'm going to buy at $31.22. It's usually, at the whole numbers, just because they want to get at those prices. Institutions as well, just because there's older school traders that were trading around before, we went to decriminalization, where they were doing by quarters and so forth. So just keep track of that. You'll see more big bids at whole numbers, halves, and quarters than at any other price. But if it is at another price, you should always keep track of that. For example, here's Chesapeake Energy. There's a big bid for 18,700 shares at $28.95. That's a big bid, and you should always keep track of that and trade in front of it. If it's a nice long setup and the tape's telling you it's strong, then you could step in front of that and get out if it decrements. Here's a chart of Apple, again at the whole number. It shows over 100,000 shares here at 540 on the bid on 3 different exchanges. So, usually you don't want to just step in front of it and get out if it decrements. Again, all the other indicators have to be in your favor. But for example, let's say it just broke out and it's pulling back to that 540 level, then that could be a pretty decent long setup if the tape has been strong and the technicals are there as well. So it shows 63,100 shares on NASDAQ, 63,100 on UBSS, and almost 20,000 on ADGX at 540. Total 100,046 and 100 shares. Now we're going to go over big bids. Keep an eye on the bid section here, and when you see a big bid, you'll notice it because it sticks out like a sore thumb. Right here. You see how all the shares around it, share size around the bids are 400, 100, 600, 400, 400, and this one shows a way more size than you expected. This right here is a big bid. And you spot this on the tape because it sticks out like a sore thumb, and you can see that it traded right there to the big bid at 50 cents and then traded higher. Let's fast forward a little bit to show you, now up 20 cents from the big bid. Okay, in this video we're also going to keep an eye on big bids. Let's keep it on the bid side until we spot it. Okay, so right there it was like a flash big bid where 100, 200 it showed. Let's flash forward right here back at 62 cents. So it dropped 62 and there's a big bid there, 155, 168, 67, and they keep flashing the orders and it'll stick there. So you keep it on those levels, and see right now it's decrementing, drops, and trades lower. So big bid is, sticks out a lot larger than all the other size bids. Okay, we're still watching big bids, so keep an eye on the bid section. Okay, and right here you can see the big bid pop up. Compared to all the other size, 400, 300, 800, 100, this right here shows about 27,000 shares on the bid, and that right there is a big bid. It disappears and it quickly trades higher. Flash bids. Okay, flash bids are the same idea as big bids, except they flash. When big bids are flashed, that means they show it at a price and they disappear. It usually happens when the order's hidden, but sometimes, people stick in those orders to see what happens to stock. Like, for example, when a big bid is placed, and these orders can be fake sometimes. They're not always, but they could be fake. They could be guys just sticking in bids to see what happens to the stock. And sometimes they're fake, so you have to keep track of the prints at that price and see what happens at the price that it flashed at. For For example, if you see 100,000 shares at a certain price, and it trades down to that price and just does 100 shares at that price and goes down, then the chances of being fake are very high. Like I said, you should always keep note of all these price levels and note the size of the flash bids. It's the same thing as a big bid, except it's just flashing on level 2. So you always got to keep track of level 2 and prints. Okay? So remember, a flashing bid, preferably a big bid, is when they show it to you and they disappear. It could be real, it could be fake. You got to keep track of the prints and see how much volume has been traded there at that price. Okay, in this video we're going to look for a flash bid, and I'll be pointing that out shortly to the 35-cent area, so keep an eye on the bids. Okay, now you see this 35 cents, see this huge bid here. Now watch how they just flash it. They do a little size, and then it disappears, it's not there anymore. And then later on it's going to go back to there, and the bid will still be there. So what they do with the flash bids, they show it to see what happens to the stock, see if it actually gets taken. Sometimes it's real, sometimes it's fake. Pretty much flash bid is exactly how it sounds like, is when they just flash a bid there. Okay, in this video we're going to keep an eye on flash bids again. So keep an eye on the bid section, and let's find out where the flash bid is. $57, $56. Okay. See how right here 62 quickly flashed and quickly traded higher? That right there is a flash bid, and then now it came back, flashed again at 62 and went higher. Now they bumped up to 67, and you'd see there that the buyer continues to step up with their flash bid. 67, and then decrements a little bit, and then finally drops. So we saw there, we saw a flash order, how they just showed it. It reappeared later after it went up about 10 cents, quickly right when it was in the market. Later stepped up, eventually got hit and dropped. It was a real order, and it decremented and ended up dropping. Big bid stepping up. Okay, so now we've gone through just big bids, we're going to talk about big bids stepping up. And this is, also an important technique, because this is how you can follow certain orders. Sometimes when there's a big order on the bid, it'll just stay there and wait to get filled. That's an example of a big bid. But sometimes these orders will step up in price in order to get filled. That means the buyers are getting more aggressive. When you see a big order, you usually want to step in front of it, follow order, and exit if it drops or decrements. It's a very simple trade, and it's very, very profitable. So when a big bid is there, say for example at a whole number, right, and it gets hit for a little bit and the stock trades higher, and then the big bid moves up 5 cents, 10 cents, then that means a big order is stepping in front of it. So again, say you get long in front of that order and it moves up 5 to 10 cents, then again you want to get out because of that order. For example, if it drops or starts decrementing quickly, because that's the reason you got in. When you spot a big bid, you just want to step in front of it and exit if it drops or decrements. Again, sometimes that big bid will get hit for some stock and trade higher. Sometimes that big bid will step up on the bid by a few pennies in order to get filled. You always want to step in front of these orders and follow them until they get filled. Then once they get filled, you exit. It's as simple as that. It's a very simple trade that's very profitable. When a big bid continues to get hit for size, you got to take note of how quickly it did and at what prices and how much volume. You usually want to step in front of these big bids and again exit if they drop or decrement. When a big bid is filled and drops, then you usually want to be out of your long position. Possibly even enter short, again if the other indicators are in your favor. If it drops, that indicates the stock just got hit for size and will probably trade lower, meaning there's more supply in the market at that price than demand. Can big bids be fake? They sometimes are fake. You'll know if they're real when the stock reaches that level and you start to see prints come through and the bid decrements. Sometimes the bid will stay the same, show the same amount of size, but you see a bunch of prints go through. It could be real at that point too. You'll know that it's fake that once it gets to the price, it disappears and just trades to that level and that price with no volume. Simple, right? Sometimes traders put in big bids to see what the stock's going to do as in a reaction. It could be, orders to fool other traders or algorithms. To fool other traders and algorithms, and just pretty much to trick people. So you got to keep track of that. Make sure it's real when you step in front of it. Sometimes, if you do step in front of it and it's fake and just goes down a few pennies, then it's fake, and that was your reason to get in. Then get out. Pennies are your loss.